Hi there everyone, good morning and welcome to this edition of The Market. I'm Avan Dabash and with me is Nikunj Dalmia. Well, let's kickstart this brand new week by taking stock of how the markets fared for the week gone by, and it has been far less than impressive. In fact, we did manage to eke out a gain by the time we wrapped up, but for the equity markets, you can see the trajectory, really the chart, the 7-day chart, speaking for itself, given that for the week gone by, it was the second straight decline that we witnessed on D Street, attributed to a number of factors, be it the Fitch rating, the fact that the FIIs have remained net sellers, or macros aren't looking all too healthy. And China has been the only major market to actually have outperformed the Indian region. The Nifty Bank Index as well was quite badly hit, a 1.2% decline. That was for the week gone by. The broader markets did manage to outperform. And Nikunj, if you look at the overall setup, what would be the factor that you would attribute to the most for that decline that we've seen 2 straight weeks on the trot?
No, we did see what could be called as a mid-air turbulence. I mean, maintaining the word that, look, the markets were due for a corrective phase, and I think we did see a strong corrective phase for the week gone by. I would also maintain that the week gone by, what we saw was a typical bull market correction. Torrent, sharp, swift, and before you realize, it's over. So it would be naive to make a case that bull markets have reversed. It would be naive to make a case that things have really reversed in terms of the market setup. My limited point is that if I look at the market action for the week gone by, the turbulence was global in nature. It was not local in nature. Let's establish that. If you establish that with India, with the rest of the world, well, we did. I mean, China has always been an exception, so I'll not pay too much of credence to that. But Indian markets did rather well if you compare it with the regional markets and if you compare it with the other markets. So I think it's a bull market correction. It was very sharp. It was very savage. The way I see market moving forward is the following, which is that the upside of the market now is clearly well defined. The downside of the market is also visible. You could settle into a range, but this time the bias, instead of an upward bias or a positive bias, the bias really could be on the downside. So you're not going to be at a breakdown. You're not going to be in for a rara move. You will now simply settle into a range. The bulls will have to sweat it out. You will see individual stocks just marking time now.
So a classic correction. And yeah, like you said, you can't look at the Indian markets in isolation, because if you take a look at that chart, that's reflecting the week gone by for some of the other global indices as well. And incidentally, yes, you saw a losing streak on Wall Street, the NASDAQ, the S&P 500, as well as the Dow Jones, all clocked in a decline. It was one of the worst weeks as well that you saw since the month of March on Wall Street, with Dow finishing the week about a percent lower as well. Lots of corporate earnings as well continue to remain on mind. And you had the Asia Pacific region as well, for the most part this morning at least. It's in the red. You will be watching out for inflation figures coming in from China and the trade balance later this week. The gift nifty as well, absolutely quiet with a mild positive bias. That's what it's indicating this morning. But Nikunj, given the fact that we wrapped up at 19,500, it was the broader markets that did take a bit of leadership. What should investors do in terms of a strategy for the day?
You should not go short, Avan. I mean, the temptation is that, okay, we missed the upside. Should we capture the downside? It's very simple. Markets will be volatile, but do not go short. Second, it is a bull market correction, very sharp and very savage in nature. Third, I would say that you will definitely see some degree of chop and churn and volatility. You don't have any large events this week. You don't have any large earnings this week. The only one is RBI credit policy, and that is where I don't think you're going to be getting anything which could be a departure from what the normal communication has been. Yes, vegetable prices have been bad, but monsoons have been decent. Globally, things have been on the back foot in terms of where the inflation rhetoric has moved, but somewhere I think markets, the governor would also be cognizant of the fact that you do have an indication that if vegetable prices do not start coming down, then we could be in for a seasonality in terms of inflation making a comeback.
Okay, yes, indeed. We'll be watching out for the RBI monetary policy as well as a whole host of numbers as we are nearing the fag end of the earnings season. And then it's also an important day as we'll be watching out for that RIL annual report, and a lot will be crucially watched out for in the annual report that was released on Sunday. They said that the company has made a strong operating and financial show during the year, despite continued volatility as well in the markets. And, you know, Nikunj, we've mapped out the number of times he's used select words like Jio in the year FY19 and FY23 was 22 and 18 respectively. Growth, digital continue to remain a word that they have used quite a bit, as well as retail, and now the new word, financial services.
Yeah, that's a new one. So, okay, what has come out first? AGM, 20th of August. There's always an excitement around the AGM. Why? Because the Ambani family in the past has used the AGM to make big launches, to make big announcements, to talk about project launches. Jio was launched there. The oil discovery was announced that time. The capacity expansion in terms of the refinery was announced there. So Reliance AGM is coming after the Jio Financial price discovery has happened. So I think from an AGM standpoint, the speech, which is always of immense curiosity, markets are of the view that what else could come in the AGM speech, given that we already have got a big price discovery which has happened in the Jio. But Reliance is Reliance, you never know what they could actually spring in. If you look at the contours of the annual report, I guess the annual reports, even though there is granularity in terms of whether new energy capex is moving, one thing I think is evident that for next couple of years, the Reliance Mega capex is only going to increase, which means that Reliance is going to be in a capex cycle. And now that is a challenge, because when Reliance is in a capex cycle, the stock historically is always underperformed. And that is something which markets would be cognizant of. So in terms of the AGM excitement, it will be there. In terms of an annual report takeaway, it is about new energy. And in terms of where the capex cycle of Reliance would move, and see in terms of the stock performance, well, I mean, the long-term shareholders, they should be mighty excited that what was not expected a year ago, which is Reliance Jio Financial Services, they already have got that share. But if you frankly ask me, my gut call, just as a gut, it should be around financial services. That is the new kid on the block, and everybody wants to know about it. Reliance has never been in financial services. You know that they can handle energy, they can handle Jio, they can handle sectors which have energy.
But is it going to be that Jio moment in financial services is the question?
No, Avan, I'll tell you why. Because the financial services is too large. Jio was more like a disruptive launch where you had scale, size, technology, and you were able to change the law of the telecom sector. The financial service per se is very large for anybody to do any kind of a disruptive move. Of course, they will have an advantage because of size, scale, reach, connection, the Jio platform. So they will come up with perhaps plethora of services which may shake out the distribution, which may challenge the reach, which may enable them to reach every pin code. But in terms of will they start lending at a lower rate? Will they start doing something which is going to change the rules and the rates? I doubt.
Yeah. Okay, so may not be a Jio moment when it comes to financial services, but nonetheless, it is going to be a very critical space to watch out for. That's the one-year stock of Reliance Industries. On Friday, it wrapped up the day at 25.09. But let's also take stock of all the global commentary then that has been coming in. A lot of factors to discuss. The fact that we've seen a losing streak continue on Wall Street. Vinny is here to sum it all up for us. Vinny?
Good morning, and starting with the commentary that is coming from Mohammad Al-Arian, and he's highlighting that important events that he's keeping an eye out on, especially the US CPI data that will be coming out. Now, what he's saying is, yes, the forecast is expecting that there could be a further moderation in the headline as well as the core inflation rates, and that is something that he's keeping an eye out on. And other than that, he's keeping an eye out on the UK GDP data. Obviously, the China data coming in as well in terms of trade and CPI are key factors to watch out for, he's highlighting. And the US consumer sentiment, that's something that we're watching out for because of those inflation concerns. So obviously keeping an eye out on this core inflation data that will be coming out along with important earnings that is going to be coming out this week as well. Now moving on, Peter Schiff, he's highlighting in terms of the 30-year fixed rate mortgage that has peaked at 18.45% in October, and now currently the rate is coming in at 7.4%, and it's further rising as well. Now what he's highlighting is that 40 years of after falling of the mortgage rates plus a lot of entry of married women in the workforce has allowed that home prices to start rising much faster than the incomes. look out for this one is what he's saying, and this is an important data point that he's highlighting that one should watch out for as well. Lastly, in terms of Lawrence Summer, he's talking about inflation concerns. Now he's saying that he still thinks that they've got very real inflation risk that is still there, and that could be one should actually be vigilant of this. He continues to be concerned that there is going to be a real inflation risk that will be coming in, and big shortages of labor in all kinds of healthcare activities is something that he's highlighting, and he believes a possibility of that could come in, and he sees a problem in the emerging of supply side due to the hotter weather, new problems of wheat market also coming in out of the Ukraine war as well. So these are the concerns that he is highlighting that one should watch out for as well.
All right, thanks very much, Vinny, for summing up all of that global commentary. Let's connect with our chartists then to find out the outlook for the markets ahead. We've got Naresh Mirani joining in on the show. Naresh, good to have you on board. Let's begin by discussing the overall market setup. The fact that it's been the worst week since March on Wall Street, the kind of handover that we've got isn't too encouraging, and there's already been 2 straight weeks of a sell-off for the equity markets. Do you think that the reprieve that we witnessed on Friday's trading session can continue into today's trade?
So I would expect again another flat day going forward, and overall we are now getting into a new range. The earlier range was 19,500 to 20,000. Now that has shifted base towards 19,300 to say 19,700, 800 on the upper end. And now we are in a slow drift on the downside, wherein we'll continue in this band. Overall, the momentum has weakened on the index, but the broader market continues to remain fine. We've hit more all-time highs on the small cap and the mid cap indices over the last 2 weeks than on the Nifty and the Bank Nifty. So for now, we need to wait for at least 1 or 2 of the heavyweights to actually take leadership to call a move on the upside. So till then, we would stick in this range of 19,300 to 700. Focus more on the broader end, look out for new sectoral rotations. And overall time to be more alert on the trades because it was a one-way rally which we had from 17,000 levels. And now one has to be more careful in terms of selection of stocks. It may not be a clean move going forward. There could be a lot of whipsaws. We'll see a 1 day up, 1 day down. Moves continue for the next, say, a week or 2. So for now, being cautious on the markets in terms of momentum.
I wanted to also get in your view then, Naresh, on the Nifty Bank Index, because that too came under acute pressure. And I know you spoke about now waiting for leadership in the market for the next move to emerge. Do you think that that would largely be from the banking space? And what is it that you're watching for by way of levels on the Nifty Bank?
So on the Bank Nifty, the problem is if we look at the top heavyweights, so we have HDFC Bank, which is at 25%, no clear trend here, just bouncing back from 1600, 1630 levels all the time. The next one is ICICI Bank, which did not see a follow-up move after the breakout. SBI is another one which could not cross that 620 mark, and we are back onto the lower end of the range. The only one starting to make a recovery is Kotak Mahindra Bank, and the positive ones are more on the small cap and the banking space. Small cap banking space. So for now, expecting the range bound moves to continue, we may get into a 800,000 pointer range from the current prices and stick there for some time before we start taking leadership in at least HDFC or ICICI.
Let's get in those top recommendations. Naresh, what is it that you're looking at on the charts then? I assume it's just large caps.
So it's a mix of stocks, but in the large caps only. First is about IndusInd Bank, which saw a strong move on Friday. Good recovery, relative strength, and the stock is on a longer term basis available at the same prices where it was in Feb to March of 2020. So the stock has seen no re-rating or say a return from the point of pre-COVID till now. Most of the banking space, the large cap banking space has done well, and the stock has consolidated well around the 1350, 1400 resistance zones. It has spent quite a lot of time here, and now could be setting up for the next leg of the move, which could take it towards 1550 plus levels in the short term and even higher in the medium term, keeping a stop loss at 1360. Second is a buy on ONGC. Now, this is a stock which has underperformed on multiple time frames, whether it is 2 years, 5 years, 10 years, 15 years. The stock has done nothing. But over the last 2 years, the formation is a cup and handle formation, which has a breakout point at 175, 180. On a dividend adjusted basis, the stock would be at a 5-year high. So if it can sustain above the 175, 180 mark, that would be a major trend change for the stock. So preempting that possibility of a longer term trend change here, and also the fact that oil prices have now bottomed out and trying to make a move on the upside. So the base has shifted higher, which generally is a positive criteria for ONGC. Expecting this to break out going forward. A buy at current levels as well as on dips, stop loss at 165. an initial target price of 190.
Bank and ONGC, that's what Naresh is picking out. Kunal Botra as well with us in our studios. Kunal, hi there, good morning. Let's look at the overall context. We weren't alone in the sell-off. You've got still, the RBI policy this week, 2 straight weeks of declines. Where does that leave the opposition on the index?
So, on the short-term charts, we were discussing this last week that how the indicators were extremely oversold at 90,400 odd mark. In fact, we also went below the 90,300 levels. But then I think we've seen a reasonable bounce on the index, and after a 700-point correction net on the Nifty spot levels, we could probably expect at least another 150 points on the upside. So I would expect 19,600, 650 as a broad zone where you might see some bit of resistance coming in. So which means another 100, 150 points on the upside is what I would expect on the spot levels for the Nifty. And I think even the sector-wise composition indicates that there is more short covering for individual sectors, like what we saw for IT stocks on Friday. We saw for large cap private sector banking names, as well as many of the other sectors, individual stocks, that there was a slew of short covering across the space. So that could also fuel as well as propel the rally on the upside. So not too much of a high expectations, but then another 100, 150 points for the next 3 to 4 trading sessions is what I would expect.
Okay, let's get in those top trades, Kunal.
Focusing on a few mid-cap names specifically, Voltas is the first stock which I would suggest as a buy. In fact, in the last 3 days, the stock has been a lot more resilient as well as been relatively strong compared to most of the other peers. So, would suggest a buy, targets of 830, stop loss could be kept at 805. And Federal Bank emerged as a good short covering candidate on Friday. We saw the stock recovering back towards 133, 134 levels. So, expecting the same for Federal Bank going forward, 140 as a target, stop loss at 130.
Okay, there you have it. Those are your top recommendations from our chartists. But time to discuss and put the spotlight on individual stocks. And Somit is in our studios for just that. Somit, let's discuss Cipla first up, the Pithampur unit getting the OAI status. But just going by the trajectory of the stock price, do you think that's already been baked in?
Well, if you see this Indore unit, this is the second plant of Cipla to get the OAI and being non-compliant with US FDA regulations. Now, this unit was inspected from Feb 6th to 17th, and there were close to 8 observations that US FDA had given. Now, what does OAI mean? Now, this means that the current manufacturing practices or process followed by Cipla is non-compliant and they need to improve these. Now, this OAI status will not halt the production or sale of the ongoing products, and Cipla contributed around, and this plant contributed around 5% to the top line of Cipla. Now, however, this OAI status will obviously delay the product sale of Advair, which is one of the key respiratory drug for Cipla, and was expected to contribute around around 80 million in FY25 sales. So that would be delayed because approval coming in for this Indore plant could now take at least 24 months, and analysts were beforehand expecting that for FY25 at least this product would contribute around 80 million, which would now be delayed going ahead. Now, because of this, we could see some EPS cuts going forward, but that is something that we need to still track and understand how that works for the company. But on the positive side, if you see, there was one part of the street that was expecting an import alert for this plant because there were multiple product recalls and 8 observations that were there, and if there had been an import alert, then the sale of existing products would also have been halted by US FDA. So at least on the positive side, there's not import alert and there's an OAI, so this clears an overhang on the share price. Nikunj, how do you see, we had seen a sharp run up in Cipla share prices because of multiple news, and given that the Q1 earnings were good, but this OAI, will it lead to a fall, or will there be a breather in the movement?
Cipla is a special situation stock because of that promoter stake. Now, when a stock is a special situation stock, and when you know that there could be a consortium of large P guys who could be interested in picking up stake in promoter family of Cipla, then irrespective of what the news flow is and something which markets think is going to be temporary in nature, the earnings may change, but the stock market reaction is not going to change. So now that I think is Cipla for you. I mean, it has become such a special situation stock that you know that the deal is almost around the corner. There's going to be a clutch of P investors who would be looking at it, and that will change the complexion of the company. That will change the way how things would move in the near term for Cipla. From a family-owned business run by professionals, it could be a company where the promoter group may exit, and the professional and a consortium of P investors may actually change the way how the business was done versus is being done. And this whole bait of open offer could really make Cipla a special situation stock. And when you typically have a special situation stock, no point in really analyzing or deeply analyzing the near term stock movement.
Okay, there you have it. That's the verdict coming in on Cipla. But let's move right on then and discuss the ethanol prices and what it means for some of the grain ethanol companies. Given the fact that OMCs, Swamit, have hiked ethanol prices and the FCI as well has suspended the surplus rice supplies.
Well, if you see the news flow, it was firstly FCI who had suspended
Yeah.
the rice supply, because of which these ethanol companies now had to go ahead and take damage of food grains or maize as a substitute to produce ethanol. Now, these prices are prices of damaged food grain and maize are higher than what the prices they were for rice they were getting from FCI. So that would have led to EBITDA losses for these companies like Gulshan Polyols, BCL Industries, Global Spirits. These are small companies but major players in ethanol market. Now, what OMC has done, they have increased the prices by around 8%. That is what the analysts are saying, around 4.75 per litre on ethanol produced from damaged food grains, and around 6 rupees per litre hike has been given if the ethanol is produced from maize. So this literally negates the fact that there would be EBITDA losses for these companies going ahead. At least that is what the street is now expecting. And again, the EBITDA will be on the positive side for these companies given there has been a price hike. But on the negative side, given the fact that ethanol prices are increasing, ENA prices will also move up, and this will lead to higher raw material cost for alcohol companies like United Spirits and Radico Khaitan. Now, ENA prices were literally flat in the first quarter of FY24, but this price hike does mean that the RM cost for these alcohol companies like United Spirits and Radico Khaitan will increase in the second quarter of FY24.
So, Nikunj, this would mean as well a boost to their overall EBITDA. What's your outlook?
Siavan, it's too small in terms of what the market, importance is. So there are a handful of companies which, in a sense, are making ethanol from grain. So I doubt that. It is not a very big market-moving news, but the larger point which you want to bring out and say that the food inflation is real, and the food inflation, I think, is here to stay. Now, you may you may ring fence the entire ethanol industry by giving them subsidized grain, but that is like a band-aid approach. That is not like the real perfect scenario. The perfect scenario is that grain prices, they remain low, food for fuel gets diverted without creating some kind of an inflationary impact. Now, in theory, that's great, but in reality, that's really not been the story, looking at the way how corn prices, wheat prices, and how rice prices have moved. Now, from a market standpoint, look, this is very small. But realistically, now that you're dealing with a real spike in food inflation as well as grain inflation, that is something which you really need to be cognizant of. So band-aid approach may protect the ethanol supply chain. It's like, almost giving them some kind of a protection. But the real world, I think, is very, very different in terms of how the grain prices would move. That's my limited point.
Okay, fair enough. Let's move right on then and hear it from Dinshaw Irani of Helios Capital. We spoke with him last week, and he said he's not feeling FOMO when it comes to pharma stocks, but definitely is looking at some domestic-facing names. Listen in.
No, we're not feeling any FOMO out here because, in fact, I don't know, I think most of you guys missed out. One of the majors that filed a K6 in US, who's listed in the US as such, who's operating out of US, and is an Indian major. The kind of price erosion that he's seen in that quarter has been really screaming as such. So it's obvious that the competition hasn't gone away in the US. So what you need to look at in pharma probably are those who can replace their pipeline. And I don't see that. We haven't seen that in any of the players who can replace their quarterly pipelines at 10% kind of depreciation levels. Right? So that's why we are staying away from those. However, we're looking at domestic players. We want to get into pharma domestic players because, as I said, that if your per capita are going to move up, obviously health spends are also going to move up, and that's one space that we are actively looking out for. Unfortunately, most of the stocks are fairly expensive, but we're still trying to dig into some.
Welcome back. Still tuned into the market. Lots of stocks that are going to be in the spotlight today that we'll have to watch out for on the back of news. Now, the Gujarat Pollution Control Board has served a closure notice to Navin Fluorine on the back of violations regarding their pollution norms. What are going to be the implications of this? We've got Lisa here with the details. Lisa?
Well, so Navin Fluorine, they have received closure notice from Gujarat Pollution Control Board, and this is for their Dahej facility. They had received the notice on 4th of August. On the 15th day, they have to pay the environmental damages of around 1 crore penalty which has been received, and the closure is related to violations relating to the air pollution norms. Now, Navin Fluorine management in the notice, they have in the announcement, they have mentioned that ascertaining the financial implication of this, that is uncertainable and difficult as of now. According to Centrum Broking, so they say that Dahej plant that remains a driver growth engine for Navin Fluorine, because there are important plants like HPP, HFO, as well as dedicated agrochemical plant that has been set up in Dahej facility. HFO plant that is seeing some challenges, so this is like a big concern for Navin Fluorine. So the closure is certainly likely to impact the Q2 financials going forward. And they also added that interpretation of the 15 days closure, that is ambiguous and uncertain for now. Whether the closure will be for 15 days or not, that is uncertain. But if it's closed for 15 days, then the financial impact will be for 40 to 50 crore financial impact that Navin Fluorine will have to face, and that could trigger a negative reaction for the stock today. So keep a watch on Navin Fluorine today.
All right, as of now, it seems to be a bit ambiguous in terms of the interpretation of the closure on the 15th day, but that's what analysts are saying as to what the overall financial impact could be. Let's move away from that and focus in on Britannia. It reported on a healthy set of Q1 numbers with the profits jumping about 35%, revenues as well grew. Let's understand the fine print, what have been volumes, what has been the overall impact of the raw material cost and premiumization. We've got Vinny here with all the number crunching. Vinny?
So absolutely, looking at Britannia's numbers, yes, they've seen a growth coming in, but overall they missed the estimates of what the street was expecting and what we were expecting at ET now as well. So revenue came in line with our expectations, but margins and profits of the company, that was below the expectation, as well as the volumes. We were expecting volumes at around 5%. Now that has come in flat this time around to low single digit is what is expected. So absolutely, in terms of volume growth, that has been flattish as well. So big miss coming in even on the volume growth front. Revenues, they've seen a growth of 8%. We were expecting a growth of somewhere around 11% coming in as well. Margins, yes, they have seen an expansion coming in at 17% versus 13.5%. And overall, when you look at it, yes, gross margins and EBITDA margins, they have seen an expansion this time, mainly because that was supported by premiumization, correction in RM costs, as well as price hikes that the company has taken. But we were expecting a much better expansion in terms of EBITDA margins. What has come in is lower than what the street was expecting. Now, in terms of commentary, what the management highlighted that yes, commodity prices have seen a marginal softness, but they have seen an increase coming in the local competition that has intensified, and that is what the companies highlighted, and that is one factor that you should watch out for as well. Other than that, there are certain price corrections that the company has initiated as well, and they remain competitive on that front. To remain competitive in this market, they've taken a bit of price cuts as well. So these are the two factors that have come out, other highlights that we are watching out for as well. But yes, as of now, Britannia's numbers were below the street expectation.
All right, below street estimates. We'll be watching out closely for that stock. Thanks, Vinny, for those details. Let's hear it out then from Sanjeev Bhasin as he talks about his top fundamental stock ideas. What's on his radar when it comes to hospital stocks? Listen in.
Now, Apollo Hospital is purely a play that, look what Indira IVF has just done. They've placed 60% at a valuation of 10,000 crore. Manipal has placed stock to a private equity at 18,000 crore. Then Apollo Hospital seems to be very, very reasonably priced. I have a target of 1 lakh crore market cap on Apollo Hospital. You will see the best ever results in this quarter. More than triple the profit of the last 2 quarters.
Let's connect with Chakri Lokpriya as well, who's joining in on the show to find out his outlook on the markets. Chakri, thanks so much for taking time out. Let's begin by talking about your outlook then on the markets overall. Given the fact that we have seen that, the markets have been on a bit of a declining trajectory, would you describe this as a classic bull market correction? What is your outlook given the undertone for the markets right now, in light of the fact that we're at the fag end of the earnings season with policy on the anvil, and we're not alone in this fall?
Indeed. The market undertone is, I think, positive. Over the next 6 to 12 months, we move much higher. That's simply because the earnings are recovering for companies and various sectors. You can see the infra push is clearly helping the earnings of several companies. And as interest rates peak and then start going down in the second half of this year, we will see an uptick in earnings estimates as a result of lower interest costs and lower working capital costs. So I think while we have had a good run in the recent couple of months, so the market may be a bit sideways in the very short term, but the whole medium term is still very positive.
Okay, fair enough. Meantime, let's get in your take then on Reliance Industries. Just going by the kind of commentary that was made in the annual report, do you think that, Chakri, it's going to be Jio Financial Services all the way as the next key trigger?
Yes, Jio Financial Services, is a company extremely well capitalized. Now is going to be starting off as one of the largest players in the field. Is going to give the other NBFCs a run for their money. The valuation is pretty much on its side, that is Jio Financial. So I think there's going to be a big uptick in its valuation and therefore the valuation of Reliance Industries as well. And, this is at a good time because, credit growth is just picking up. Consumer financing is very strong. And the margins for the industry are still very healthy. So I think that way, the Reliance Jio is very well placed.
All right. How can we forget Zomato? Half an hour into trade, we've not discussed Zomato, right? That's what happens. You go for a weekend, come back and say, oh my God, the biggest stock of the day on Friday. We've not discussed it only.
Nikunj, but we just started discussing stocks and it's the first one you've spoken about.
No. It is just see, Avan, look at the setup for the fintech and consumer tech stocks. From a feeling of euphoria to an absolute mortuary, now survival and excitement. All shades of human emotions, I think, are at play. If I really look at, forget Zomato, you look at all of them collectively. Paytm was India's largest IPO. And then it has never seen that level. At the beginning of the year, anchor investors were just throwing away the stock as if there is no tomorrow. From lows of sub 500, Paytm is now almost at 800. It's been a remarkable comeback. Zomato, 52-week low, I think it made last year sub 50 or sub 40, I don't recall.
40.5.
40 rupees, yeah, sub 40 or sub 50. 40 has become almost 90.
Yeah, 95.
That's almost like 100% jump. Correct. Policy Bazaar was sub 400. It should be what, 700? 750. These are 100% gains which have come. Nykaa, I think, is the only exception where because of that whole stock split issue and the way the whole exit of CFO was handled, Nykaa is still way below what its price was, and even in this year, it's down by about 5%. So my limited point here is that from this whole appeal that some of these businesses will be high growth business, but they will grow and never make money, that narrative has changed. And for me, I think is the biggest hurrah, because these are the businesses of future. These were the businesses which were incubated by PE money. These were the businesses which now the promoters have realized that, folks, when you are part of the private market, the rules are different. When you are part of the listed market, the rules are different. And that is what they are recognizing. If you're in the auction market, it's about cash flows. If you're in the auction market, it's about profits. If you're in the organized auction market, it's all about dividends and the yields which you offer to minority shareholders. Okay. Now, Zomato, Policy Bazaar.
Yeah, on the charts, of course, these stocks have given returns of 80% to 90% on average. Even Paytm has done, I think, from sub 500 levels to at a point when the stock was at 900 plus levels. Now I think the stock has corrected. So yes, these stocks have done reasonably well. But from a short-term trading point of view, I'm not sure whether these stocks would probably get another leg of fillip on the upside immediately, because most of the indicators on the hourly charts as well as on the daily time frame have entered into an overbought territory. We also look at it in this way, that the stocks have a tendency of going through 3 days or 4 days of strong price uptrend and then remaining into a range for at least a couple of weeks before they migrate to a higher range. For Zomato, I think the first major resistance is around 103 mark. So the all-time high levels for Zomato was 169. The fall or the sell-off was closer to 40 odd. The low for the stock, a 50% retracement is closer to 104, 103 levels for Zomato. So I think that's where one should probably try and take some bit of profit off the table and then look for retracements to buy back again.
Okay, Chakri, what should one do with consumer tech and fintech stocks? I mean, the feeling of a carnival is not back, but surely some of these stocks are up more than 100% or 80, 50% from the recent lows.
Indeed. And if you look at the current earnings results of these companies, they've all turned showing signs of getting to profit or almost there. And also the other thing that you must notice is they've all scaled back their growth plans. So I guess they're more realistic today in their growth expectations than they were then at the time of the IPO. At that time, the story was about more cash burn for profits more distant in the future. So I think from that perspective, it's positive. But based on the current earnings growth rates or revenue growth rates, I think it's time you just let them be, because their valuations are pretty much up there after the current run.
And I bet you didn't know, Nikunj, that now there has been another designation at Zomato called the Chief Fitness Officer as well, who's actually going to look into the wellness
we should call Nentara our ex-colleague
yes.
there. That one is upper alley.
Yeah, exactly. It absolutely is. But yeah, that's certainly been no mean feat for Zomato, the way the stock price has moved now at 95 levels.
Yeah. So I'm going to just shift gears and talk about another pocket which is on the other end of the spectrum, from new age to classic old age, and that is utility. So why Zomato? I mean, okay, we get excited with Zomato and Policy Bazaar, but if you look at NTPC, PFC, REC, these stocks have also done rather well for themselves. It's just that they are not exciting enough for us to talk. Okay, hello, there's some news. There is some news. Vijay Shekhar Sharma has entered into an agreement to purchase 10.3% stake from Ant Financials. What does that mean? Okay, let's break it down for our viewers. Ant Financial has been one of the biggest investors in Paytm. Now, Paytm in a sense, or Ant Financials in a sense, they've been paring their investment down in all the consumer tech and fintech companies in India. And one of the largest investments in a sense has been Paytm. How much do they own? I'll just be prompted by my research in terms of the total ownership of Ant Financials in Paytm, but I knew that they had a substantial holding. Paytm, Vijay Shekhar Sharma has entered into an agreement to buy 10.3% stake. What else do we have in terms of information? Let's look at it first. I'll just wait. Sometimes you have to wait patiently for the news to be updated. Ant Financial will no longer be the largest shareholder in Paytm. That is something which is important because this was the overhang for the stock. Paytm expected to benefit from the new ownership structure. I'm not so sure that why Paytm would benefit from the new ownership structure, but you can sufficely say that if Vijay Shekhar Sharma has entered into an agreement to buy 10% stake of Ant Financials in Paytm, the overhang that Ant Financial will come out and damage the stock, I think that is something which will reduce substantially.
It's about 23.7%.
Yeah. That's 10%. Look,
Yeah.
what is the market cap of Paytm? Let's look at it. Actually, I'll just need my Bloomberg to work for me.
Yeah, at about 50,000 crores.
Yeah, so that's about 10,000, the 50,000 or 50,000. I mean, that's about 5,000 crores Vijay Shekhar Sharma in his private capacity would be picking up. And that's 10% less, and 10% is not going to be such a large overhang, because in this case, Vijay Shekhar Sharma has entered into a pact to buy stake in his personal capacity. That's what I think we can understand. Chakri, do you want to react to this news?
Well, indeed, I think one that demonstrates that he has certain amount of conviction in his own company. Second, but to his benefit, it's also he's buying it at a far lower valuation than it was, let's say, about a year ago. Three, by increasing his own personal stake, if that is the one and it's not the company stake, his percentage share in the company, then he continues to have a greater say in board matters and therefore in the direction of the company.
I think for me it was overhang and Ant Financial in a sense. See, some of these stocks, they were completely crashed. They completely went through what could be called as crash landing in January and in Feb, because that was the time Paytm, Sequoia, just about everybody who had invested in some of these stocks, they were selling without thinking. And now Zomato, well, everybody wants to buy. Paytm, well, the overhang of Ant Financial is going to be reducing significantly. Nuresh, independently of the news today, how's the chart of Paytm looking?
So Paytm is looking interesting, like we discussed last week also. It has come to a retest and a good buying zone. So the stock was 500 to 750 for the last almost 1 year. That was the classical bottoming out formation. We saw that breakout move. We went above 900. And just a week back, the stock made a bottom again around 750 levels. We are at 800, say, today. So classical retest done. And the next move should take it beyond that 900 mark. and then go towards closer to say 1100 is the next resistance. So that's the structural view. Very similar to what happened with Zomato, 55 to 80, then took a pause, then now we are at 95. So this is the case happening up. Same has been happening with the PB fintech. So we are seeing a very similar chart formation across. Paytm looks very interesting because that retest is done. It has spent 2 months doing that retest from 900 to 750. And from here on, would be looking at a target price of 900 first and 1100. So buy at current levels.
Just look at the cash promoter is going to be getting in the company. I mean, this is a very large commitment which Vijay Shekhar Sharma would be doing in his personal balance sheet to reduce the ownership of Ant Financial almost to half, and he now will have 19.4% stake. Now, also remember that the promoter is coming at a price of 700 rupees, which also means that he is ready to buy or perhaps invest his money at even after a run-up of about 70-80% in the stock from the recent low. Unlike the ownership what Vijay Shekhar Sharma, the promoter, had in this entity when he incubated Paytm, now he's putting his shoulder to the wheel, and this again is a indication of commitment. B, the fact that if the promoter is coming at these levels, that also means that they feel that there is value in the stock. That's how I look at the current construct. But I'm going to change the scope of the discussion and move to two stocks which have surprised everybody last week. Kunal, one was IRFC, and second was India Bull Housing Finance.
So IRFC is something very interesting. I think I've been bullish on the railway space for quite some time. Titagarh was one of the stocks which I had highlighted, much prior. But I think now even these railway stocks like IRFC, IRCON, I think has done reasonably well. Texmaco Rail, I think a stock which had been absolutely sideways, that stock has also done reasonably well. IRCTC is making a comeback. I think if I'm not wrong, the stock in the last 1 week has recovered some 6-7%, nowhere close to its life high levels, but then the recovery is also quite stark. Specifically on IRFC, I would be bullish on the stock. Now, after such a kind of a steep uptrend, we could expect some bit of consolidation at this 44-45 mark for IRFC, but I believe that this leg of up move should take the stock higher to almost 52 to 55 levels. So which means a buy and dip strategy could be a good strategy in case if the stock dips towards say 40 to 43 levels. That should be a good point where one could look to enter for a potential target of 52 plus.
Okay, let's move right on then. Stocks on the editor's radar. And Nikunj, we've been talking about PSU banks quite extensively, but it's interesting just mapping out the kind of move that we've seen in the last week or so, especially from some of these heavyweights like SBI, BOB and Union Bank. And the fact that they snapped their 2-week winning streak, and there are a number of factors as well that can be attributed to this.
See, you look at last two numbers, which is BOB and SBI. BOB came over the weekend, SBI came in the second half on Friday, and the market reaction was subtle during the market hour, and now brokerage notes are out. What is important here is that you got to ask yourself is that what is next for PSU banks. The similarity between BOB and SBI, which in my book are the ones which could be a trend indicator for large cap corporate banks, large cap government owned corporate banks, is that credit growth is coming down, NIMs are under pressure. That could also be largely because of the way how the interest or the cost of deposit is moving. While I completely believe that this is not the end of the cycle or this is not end of any kind of a reversal for the banking sector per se, and the credit quality is still very strong, the whole re-rating which happened in the PSU banking space, which was a function of A, valuations, B, they had a huge advantage because of low CASA, and C, the credit growth I think was phenomenally strong. I think that whole re-rating is over. I think PSU banks are in a good spot, but they're unlikely to see what could be called as a perception expansion, which is what you call as price to book or P expansion. Banks will still clock a credit growth of 14 to 16%, depending on the bank which you're talking about. So if you use that as a prism, consider where the cycle and the asset quality is moving, consider that where the capacity utilization is moving. I think PSU banks have a scope to outperform. Bad declines, patches of volatility should be used to your advantage to buy into them. But the linear trading move what we saw in SBI in 2022, in 2021 and 22, let's say Bank of Baroda in 2022 and 2023, I think the linear move in my book at least is behind us, and these numbers will endorse that banking is one sector where incumbents are important, but the old timers and the big boys, they really have the right to win.
Chakri, let's get in your thoughts. Do you also believe that perhaps that linear move in some of these PSU stocks is now behind us?
And I think Nikunj is absolutely right in terms of, they've had a very strong run. And the one thing which is actually going in their favor of all the PSU banks, that is as we move towards May of next year, the infrastructure spend and all the public government spends is only going to accelerate further, which is good news for all the PSU banks. So the loan growth rate, which has kind of come down, 14-16%, can kind of accelerate back. We are close to an interest rate peak, hopefully, that is, depending on what the US Fed does and how RBI responds. So which means, again, the NIMs, which have been contracting because of the deposit repricing, that will see some amount of plateauing as we hopefully go into the second end of 2023. And as that happens, then again, the valuations, even now they're not expensive, but again, the valuations, it provides an additional room for further expansion of their profit growth rates.
In news from agencies, supply scenario to continue to ease during July on robust coal production, cut in supply. I mean, this is an IEX, I guess, update from the exchanges. We can actually safely ignore that. Nuresh, come in on PSU banks.
So the move has been, it was looking like a breakout, but did not see any follow-up move. We saw State Bank of India come back to 600, 620 zones, flopped around that levels. Canara Bank came back to the previous 52-week highs of 340, did not see a follow-up move. Same is the case with Bank of Baroda. So out here, seems like we get into a consolidation, and then the next time we notice it, whether it can make a breakout move. But the resistances are clear. The supports are still a bit lower for all the names. So for now, we are getting sideways move. Time to relook at the view and get back in only when we start crossing new 52-week highs. Otherwise, the sector could go into a sideways period for much longer than we think.
Okay, now we know the structure. As per the agreement between the parties, Resilient will acquire ownership and voting rights, which means that Paytm stock had overhang of Ant Financials. 10.3% stake of Ant Financial will be picked up by Vijay Shekhar Sharma. But in turn of that, Ant Financial will get OCDs, that is optionally convertible debentures from Resilient, which is owned by Vijay Shekhar Sharma. So the economic interest of Ant Financial in Paytm indirectly does not reduce. But what changes is that the overhang which everyone had, that as the stock goes higher, Ant Financials and other investors will sell. I guess that is something which gets reduced. That is overhang, and that has been a big overhang per se. So that in a sense is a bit of a technical indicator. Now we were discussing Zomato, Policy Bazaar, but another stock which is worth discussing, Nuresh, I think is LIC Housing Finance. Up very smartly, and it massively outperformed last week.
So it came up on the volume radar as well. It was the largest volume since November. That is the time it gapped down, and post that it has been in a tough zone. Every recovery has seen a problem area. Now, the reason it is interesting is if you look at the last 2 years, the stock has had a lot of problems around the 430 to 440 mark. So back in 2021 also, it topped out around 440. Back in 2022 also, it topped out around 440. Even in start of January 2023, 430 was the top. So could this be a start of a fresh uptrend? So watching it out, if it can sustain above the 440 mark, that would imply the stock is finally changing trends. And the stock has done nothing for a long period of time. The stock was at 440 back in 2018, as well as pre-COVID around 440 mark in 2020. So it could be a multi-year breakout. And even in 2015, the stock used to be 440. So can this be a change of trend? It is purely because the volumes have come up to be almost 5x or 10x the normal volumes. That is where it makes it more interesting. So watching it out today, if it can see, or over the next couple of days, 3-4 days, if it can sustain above 440, would be a buy. Even at current levels, if somebody wants to preempt, it would be a buy. Any fade off today towards 415, 420 levels with a stop loss at 400. Eventually, if this could surprise if it sustains above 440.
the view coming in. In the meantime, we'll also be watching out for the PSU bank stocks on the back of brokerage notes. Jefferies as well has come out with their note on SBI with a target price at 760, saying that the loan growth has moderated from the highs, asset quality as well is holding out quite well. Nomura as well has come out with their latest brokerage note on M&M. They've maintained a buy rating. They've upped the target price to about 1978, saying that the results have been better than expected and they believe that the investment in RBL has a strategic objective. Lots of question marks, Chakri, regarding that investment in RBL. Your thoughts and how have you looked at M&M's trajectory and the SUV outlook?
I think the SUV outlook for M&M is kind of now today there is more competition than there was. The bookings for some of its flagship products is actually kind of slowing down. So while it's still overall healthy profits, I think the margins will kind of start getting hit as you go into the next year. Second is M&M has been a sum of parts story, and with now the acquisition with the stake increase that they're making in RBL Bank, it kind of again it questions what are they going to do and how is it connected with M&M Financial Services. So I think that strategic use of their funds is something which will kind of remain overhang until they give you more information or why they're making this particular stake and not this is a strategic stake.
Okay, fair enough. Meantime, let's also get in a view then on the charts of some of the stocks that did manage to have a pretty decent run up on Friday's trading session. And you did have the likes of an NBCC, which soared about 8% plus, LIC Housing Finance, an interesting mover. Info Edge scaled up and was higher by nearly 8% in trade. JK Tyre and Castrol as well managed to hold out, and so did an MRF. Wanted to get in your thoughts, Naresh, on this entire tyre space and how you're looking at even the likes of a Castrol on the charts?
So the tyre space has been in a strong uptrend. We've seen all of them do well apart from Balkrishna. Now, the problem is it's been a stretch of a move in the short term. So, for example, Apollo Tyres, after breaking about 340, 4 months back, has gone up to 440. You have a CIAT, which has done a big move. You have a JK Tyres also, which has gone up from 200 to 275. The only one maybe which has some more catch up to do, also caught up in the last 2 days, which was MRF. I think the only small cap name which is left is TVS Rechakra. So the whole space has done well, apart from Balkrishna. So the view is the trend is pretty strong, but you want a little bit of a dip to actually initiate fresh positions. It would still be a hold because the trends are strong. But going forward, would wait for a dip. In that case, maybe MRF, if it takes a dip, could have some more catch up to do. JK Tyres coming back to 250, 55 could be an entry point. But would be a little cautious for an extreme near-term period because the stocks have moved quite a bit over the last 2-3 sessions as well as over the last 2-3 months.
All right, let's move on and hear out views from our top market experts. Which are some of the most underrated and overrated sectors where one can find right value right now? Let's hear it out from the big market voices.
Point is that longer term, these stories will play out perfectly. In fact, the new age companies that we own as such. But so as I've said earlier also on your channel, what do you look for in a platform? Basically, these are all platform companies. They offer a platform which gives you convenience. Is that an option of converting? I mean, caching that convenience? Yes, right. If there is, are there enough users for this convenience? Yes. But is it easily replicable? I think that is the last question that you need to answer, which has to go in the negative rather than the affirmative. If that is the case, then you want to own that company, and that's why we believe that the ones which we own are fairly non-replicable as such.
Pharma continues to be a defensive bet, but unfortunately, there is no single sector-wide trigger, either positive or negative for the sector. So to that extent, we will have to evaluate stocks from a bottom-up perspective and then take a call. Yes, in a market which has gone up quite well in the last 4 or 5 months, we have not seen pharma really participating to that extent. And anyways, pharma has been an underperformer for the last couple of years as well. So to that extent, there is a relative valuation comfort there, but there is no single trigger that can take the entire sector up in our view. So you will have to evaluate them separately.
If you look at it in absolute terms, you might not get that indication that it's going to bottom out. And there are definitely some headwinds. But if you look at the IT index divided by the Nifty, it is at a 10-year support. And I think after Infosys results, a lot of the negatives are already in the price. People are factoring in the headwinds that's coming out of the US and the global markets in general. And we, any which way, live in a very dynamic world. But chartically, I feel that it can only get better from here. But it's not going to be a holistic rally. It's not going to be a rally across the board. So within the top 4, top 6, the ones that we like are TCS and Tech Mahindra. And I believe that these two stocks will stand out and will outperform the IT index. On the other side, if you look at mid-cap IT, there is this digitalization, AI theme-led rally which is taking place across the board, which I think is not going to die down.
All right, there is SGX. What about Asian markets? You got a lot of red. Now you got to ask yourself, is that do you go short or you don't do anything? Naresh, are we going through that patch where for Nifty trader, it's just one of those no trade, don't do anything kind of in zone? Look, 100 points, 150 points on an index of 19,000, the risk reward ratio entirely may not be favorable. I mean, you can squeeze out 100 points, you may squeeze out 150 points, but frankly, from a risk reward standpoint, that's not the trend you want to associate yourself with.
Absolutely well put up. So that's the point. At current levels, the risk reward is not great. And we've gone through a move from, say, 3,500 points from the lower end of the zone. And we are getting the first consolidation, which is decent, wherein in terms of price correction has been okay. And now there are signs of this period could continue. We did not see a follow-up selling below in a big way below 19,550, 19,600. In that case, we would have gone looking for a short trade, and we've recovered back about 19,500 level. So that tells you there is no momentum on the downside. Momentum on the upside has been clearly weakened with the move. So for now, we could get into a range-bound move, choppy days wherein one day up, one day down could continue, making it difficult for a trend trader to participate. So this is the time where you say, I would not trade the Nifty and the Bank Nifty. Look for stock-specific rotations as they come going forward. And one has to take a fresh view because a lot of stocks which did the rally could pause and there could be new names which would be coming up over the next few weeks.
All right, in the meantime, let's also get in a view on some of the breakdown shares. And Kunal, come in on the charts of an SBI. We have, of course, discussed this extensively. And what's your view on a JM Financial as well as Aditya Birla Fashion?
So I think SBI has managed to break a major support. So 600 was a strong psychological support for SBI. That's been taken out. And I think post results, there was no major pullback for the stock price, even on an intraday basis. And so ideally, we look out for stocks which come back to their intraday highs post results. And then even if the stock sell off, we expect that the tendency of the stocks to make a new high could probably limit the downside for these names. But that was not the case for SBI. The stock closed almost at the day's low, again on the back of some extremely heavy volumes, of course on the back of the results. So I would expect the stock to get into one more leg of downtrend, possibly come back towards that 555, 50 odd mark. So which means a potential downside of another 18 to 20 rupees on the SPI is what I would foresee from current levels. ABFRL on the other hand, I think has just been a stock which has gone through a very mild bounce. So from 350 plus levels in 2022, the stock fell down to as much as 185, 190. And from there, it's recovered towards 215, 216 mark. But I think on the short-term charts, this was just a marginal bounce for the stock price. My sense is that at least for the next 3 to 6 months, the stock should consolidate and get into that phase of a price correction every now and then. So rather than looking at an investment over here, one should just look out for a short-term trade.
Chakri, let's get in some stock recommendations going as well. For the long haul, what's looking interesting in this market that you believe is a lucrative buying opportunity right now? Mid caps, large caps?
One in the industrial space, in the EMS space, companies like Avalon, Dixon, Keynes, all these companies are going to benefit from the government's laptop import substitution as well as electronic products import substitution policies. These companies, even despite this kind of a restriction, are going to grow their revenue at about 35-40% each year for the next few years. Bottom line is going to grow much stronger. They have a short trading history because it's a new sector, but the margins are still holding up. And companies like Avalon are moving up the printed circuit board, the value chain, and therefore the margins will improve. And I think so because the earnings are so much intact, the top line is so much intact, these companies are good for both the short as well as the long run.
All right, let's check in on the pre-open rates this Monday morning then, and a little bit of red on the Sensex right now. It's actually 480 points off, and for the Nifty, settling around the 19,500 mark, but just initial ticks right now on the pre-open rates. Let's find out those mid-cap strategies too. And Kunal, what's looking good?
So Zydus Life is something which I would suggest as a buy. In fact, it's been one of the few pharma stocks which has done exceptionally well from a previous low. I think the previous year low was closer to 350 for the stock, to a point where the stock is now at 650 plus levels approximately. So would suggest a buy on the stock, expecting this uptrend to continue. 670, 680 as a near-term target range, stop us at 630.
All right, let's find out, Naresh, what's on your radar?
So that would be a buy on Ashok Leyland. The stock has given a 3 to 5 year breakout above the 170 mark, and now consolidating higher at 175 to 185, kind of making a flat formation which has a breakout above 185 levels, which should happen over the next few sessions. A preemptive buy here, stop loss at 174 and the target price of 200.
Okay. Let's connect now with the management of JK Tyres. We'll just connect with them in a second from now.
Yeah, we've got with us Mr. Anuj Kathuria. He's the president, India at JK Tyres, now joining us on the show. Thanks so much then for taking time out. If I may begin by just talking about the Q1, because that has been a pretty strong set. How has the raw material basket cost cooling off benefited you in Q1? How do you see prices moving in Q2? And is a number that you have reported in the first quarter look sustainable?
The numbers that we have reported in Q1, definitely they are sustainable. In fact, we would be looking for certain better numbers going forward in the year. As far as raw material prices are concerned, we had seen that from Q3 of last year, the prices had started coming down. As of now, they are quite stable and range bound. And we expect that going forward in the year, they should be kind of in that range. Unless there is something which is, happens which is not in our radar. But we generally feel that it will be quite stable.
Do you expect FY24 to be a record year for you in terms of PAT and revenue? And how do you see them to move from Q2 onwards?
See, as far as the top line is concerned, we are seeing that, there has been a steady increase in the top line quarter on quarter. Domestic demand is quite buoyant, and we expect that going forward, the OE demand, both in the commercial vehicle as well as in the passenger car. Also, the demand from the replacement market should be quite good. There's a lot of emphasis on the infra spend from the government. Monsoon is expected to also be almost kind of better than normal. So all the positive indicators are there, which will fuel growth in the coming quarters. So on the top line, we definitely expect to end the year on a high. On the other side, exports, we have seen that things are getting better. The last quarter one of this financial year, was better than the previous quarter, which was the Q4 of the last financial year. We are seeing some markets, some international markets, the demand is coming back. We are also closely watching the other markets, especially the US market. And if there, we expect that there should be recovery there as well. We'll have to wait and watch as to when it happens. But overall, we expect that the export demand also should pick up, at least in the second half of this financial year. So all these are quite positive indicators to be seeing that the year would be quite a good year.
Now you completed the expansion plan of radial tire manufacturing unit in Madhya Pradesh. How do you see the gradual pickup in capacity utilization and revenue contribution?
You're talking about the capacity expansion we are doing at the Banmore tire plant. So there we have already finished the phase 1 of the expansion, and phase 2 is going on. The overall capex outlay for Banmore itself was around 930 crores. out of which there was a phase one, which was the debottlenecking, which has been done. This is basically a passenger car radial focused plant, and we are making passenger car radials. The demand for PCR tires as of now is quite good. In fact, if I take the OE demand as well as the replacement market, and even from the export market, overall, the demand is quite robust, and we expect that this demand will continue to be there. We expect that there will be an overall growth in the PCR tires as compared to even the previous year, which itself was a strong year. So overall capacity utilization is kind of will happen. In fact, we are expeditiously working on the expansion so that we can get the capacity in. In fact, I would say that the way we have kind of gone through the expansion program, it has got timed perfectly. We will be, the capacity will kind of come into being when it is required. And the second half of this financial year, the capacity will be available for us, and it would get utilized almost immediately as soon as it gets set up.
The segment kya khabar hai? Voltas will be in focus today as companies expecting a rise in market share for ECs. And Sharad, this has been the problem for them, right? Great brand, everything is fine, but they're losing market share to the Koreans and they're losing market share to the Indians.
Well, yes, in focus we are having Voltas, and what we are getting from the channel checks is that the market share of the room AC segment is expected to go up by roughly 400 basis points. Now, do remember, for the room AC segment, the company enjoys a 21.6% market share in an overall category, and this is coming as per the March numbers. Apart from this, in the fourth quarter itself, the management commentary was there that there was a slight decrease when it comes to the market share. So, an important development coming in when it comes to the market share for the room ACs. Now, of course, looking at the stock itself, it's still down 22% from its highs seen in the year 2022. Apart from this, the Q1 results are expected to come in on August 11. And as for the expectations, of course, the room AC segment is going to be impacted because of the unseasonal rains as well as increased competition. While on the other side, the capital goods side of the business, the EMPS segment, that is expected to have a 25% year-on-year basis growth, and also positive margins are expected to kick in. Apart from this, also important trigger for the company and the commentary is the setting up of a backward integration facility for the manufacturing in southern India.
Let's understand the Paytm news and let's break it for our viewers. Rahul Jain joins us, Vice President Research with Dolat Capital. Rahul, good morning. Thank you for joining us. Do you think this is just technically a book entry where the ownership from the right hand moves to the left hand?
So, hi, thanks for this. Basically, I would say this helps in a multiple way. This actually talks in a way that what kind of relationship and support they have from Antfin, and from a clear business point of view, I think it takes away the risk around, there's a lot of talk about, in the past there has been talk about hostile transaction. What if Antfin stake is purchased by one single entity and they were owning close to 25% at that point of time? So those kind of risks are out. And secondly, even from some of the regulatory challenge, if you look at their payment services license, which is pending for approval for more than 6 months now, where the constraint was also related to, Chinese ownership. So essentially those kind of challenges may see a better continuity going forward after this transaction. So it helps in many ways.
Rahul, was there an overhang of Ant Financials in the market? Because, they've not come out and said that, look, we are looking at selling our stake in the market. So that was an assumed overhang.
Yeah, there was an assumed overhang, and the reason why it had some merit is because they were actually owning some stake in Zomato also, which came in the market some 6% odd. And there was another entity of Ant which was owning stakes. So once those stakes are out in the market, there is always a thought process that more could happen anywhere else. But yes, on specifically for this 25% stake, there was no official comment. And usually such block would never come out as an open comment because that would lead to a significant amount of speculation. But at this point, definitely this helps.
Okay. So if the stock goes higher because of this technical factor, should one use the strength to sell out, or this is something which is going to change the near-term terminal value of the stock?
See, I would say basically the way the financials have moved over last couple of quarters, there's a lot of merit in the business, and the value of the stock in our view is much higher than what it is right now. So we were kind of positive earlier also, and this only adds up to our confidence. Yes, there are some investors in market who have a very, very big constraint regarding to the supply if there is a significant amount of supply in the market. So any resolution on that kind of a thought process definitely help their mindset so that they can also be focusing purely on the fundamental factor and not on the supply side factor. So that way it possibly helps in a potential stock up move on a relative basis.
Rahul, fantastic. And thank you for joining us. And the Paytm stock, I want to look at Paytm, I want to look at delivery, I want to look at Zomato. I want to look at every stock where Ant Financial has a holding. I think Zomato, they had a holding. Delivery, I'm not so sure, but Zomato for sure, they had a holding. I remember reading the shareholding pattern. 97.5, almost 100 rupees. Kya Zomato was century marega? Let's see. These are the stocks where Ant Financial has a holding, and that would be an interesting one. Let's also look at Info Edge actually. Why Info Edge? Because they have ownership in Policy Bazaar and Paytm, Zomato both, and that hit out of the park on Friday. Info Edge on your screen, flat, but still at 5,000. Wow. It was a 350, 400 couple of years ago, and not a couple of years ago. I mean, it's like 7-8 years ago. It's been a multi-bagger stock. We don't talk about it. I've got PSU banks on Meritar, and let's just revisit the logic which I shared with our viewers half an hour ago. You look at last two numbers, which is BOB and SBI. BOB came over the weekend, SBI came in the second half on Friday, and the market reaction was subtle during the market hour, and now brokerage notes are out. What is important here is that you got to ask yourself is that what is next for PSU banks? The similarity between BOB and SBI, which in my book are the ones which could be a trend indicator for large cap corporate banks, large cap government owned corporate banks, is that credit growth is coming down, NIMs are under pressure. That could also be largely because of the way how the interest or the cost of deposit is moving. While I completely believe that this is not the end of the cycle, or this is not end of any kind of a reversal for the banking sector per se, and the credit quality is still very strong, the whole re-rating which happened in the PSU banking space, which was a function of A, valuations, B, they had a huge advantage because of low CASA, and C, the credit growth I think was phenomenally strong. I think that whole re-rating is over. I think PSU banks are in a good spot, but they're unlikely to see what could be called as a perception expansion, which is what you call as price to book or P expansion. Banks will still clock a credit growth of 14 to 16%, depending on the bank which you're talking about. So if you use that as a prism, consider where the cycle and the asset quality is moving, consider that where the capacity utilization is moving. I think PSU banks have a scope to outperform. Bad declines, patches of volatility should be used to your advantage to buy into them. But the linear trading move, what we saw in SBI in 2022, in 2021 and 22, let's say Bank of Baroda in 2022 and 2023, I think the linear move in my book at least is behind us. And these numbers will endorse that banking is one sector where incumbents are important, but the old timers and the big boys, they really have the right to win. First, it's Monday morning. We start a brand new week. Bit of a back foot last week, but the bull market is still alive and kicking. All bull markets, they're correct. And typically what you see in a bull market is a very savage correction. The bank Nifty last week, SBI, it came down. The Nifty did not fall because IT came for the rescue. So let's see, will it be Bank Nifty again? Because you don't have any large triggers, at least for the banking system per se. Anything negative in the credit policy may fuel downside momentum. Anything upside in the credit policy may not generate a lot of upside momentum or trigger, because the Bank Nifty already isn't in record high. So that's the problem. I mean, now we are reaching that stage where a lot of good news is something which is not having impact on the market per se. It's a full house. When I say full house, near perfect market breadth. The bulls are occupying the front seat and the balcony seat this Monday morning. You've got the small cap index, which is off to a good start. Nifty is off to a good start. Banks are off to a good start. And the hero of last week, which is IRFC, that's up 3%. Suzlon up 1%. JP Power and Ventures up 3%. Reliance Power up by about 3%. Let's look at Paytm. Paytm Karo. That's the ringtone. Don't we know about it? 9% higher. The overhang of Ant Financials is reduced significantly, and 9% higher for Paytm. It will surely have an impact on Policy Bazaar, Paytm, delivery, just about everything where the FI ownership or the P ownership is there. I think the rub-off effect will be there. So delivery 421. You got uptick which is there in Zomato, which is at 99 now, almost 100. And you got Sterlite Technologies, which is trending upon very strong volumes. It's a good start, I would say. Benchmark indices are off to a decent start. And then you got on the losers, Cipla, the news what Somit just spoke about in terms of no new plant approvals could come largely because of that import alert. And then you got HFCL, which is at 70 rupees. Don't talk about it, but 70 rupees for HFCL. There is some news, I don't remember. But the star today, hands down, I think is Paytm. And then what's fallen off the radar, Avan, is Adani Green, 9% down.
Okay, yeah, indeed. Today it's IT, media, metals, and it's pharma on the losing side. Yeah, Paytm sure is your star for the day. But check in on a lot of the other newsmakers. Aurobindo Pharma, they've got the US FDA nod for an injection. You've got something like a Balrampur Chini. A reaction to its numbers. Margins have been very robust at about 12%. There is also got ICICI Lombard. That stock will remain in the spotlight as they've got the RBI nod for ICICI Bank to up their stake by about 4%. In tranches, PG Electro came out with its numbers. It's been a healthy set of earnings. TCPL came out with its quarterly performance. Net profits have grown about 5% or so. Something like a Shipping Corp has come out with its earnings, so that too is going to be a result reaction. APL Apollo, Morpen Labs has been a thumbs up when it comes to numbers. Ethos has come out with a 42% growth in its net profits. Parag Milk margins as well have grown to about 94%. Mrs. Bector Foods, nothing short of an impressive set of numbers, and an Affle India as well as another result reaction. So quick check-in on all these. You flagged off Britannia, but that aside, Cipla, but that aside, there's Britannia. It's been a disappointing set of numbers. The volume growth as well has been flat, and I reckon that will disappoint the street. Well, not so much. At least it's holding out in the green around the 4,800 mark. Bank of Baroda, the Q1 results as well have missed estimates. It's been a loss for BHEL and an EBITDA loss at that. You've got Delta Corp. Hardik Debar, by the way, has resigned as the CFO. That happened over the weekend or so, and that stock as well is at about 185. Fortis Health, Delivery came out with its numbers, a quick result reaction. Gujarat Fluoro, as well as Moltec and Gati, a net loss versus a profit this quarter. So lots of stocks that are in the spotlight. But Kunal, what's your first take looking at the screen and the market breadth?
Well, I think it's an okay start. I didn't expect too much of fireworks. I would still believe 90,600, 650 could be at max the upside for the index over this very short bounce for the index. In terms of opening trade, TCS is something which looks attractive. So we've discussed a lot of these IT stocks previous week that these stocks are bound to get into a bit of a short covering mode. I think TCS is something which looks attractive from an intraday as well as from a short-term trading play.
All right, watch out for TCS. Naresh, let's quickly get in your top trade for the day, your first trade that you're punching in.
So looking at IndusInd Bank, the stock is shaping up for an eventual breakout move above 1450. Good relative strength in the last two sessions, so looks interesting.